Good morning, everyone. Welcome back to our Monday morning trading session. I trust all you fathers out there had a pleasant Father's Day over the weekend. All right, huge opening gap on the NASDAQ this morning. Trading left off down here around the 43.60 mark, give or take, and London Open way up here, and of course the North American Open also huge open around the 44.20 mark. So a rather substantial, huge opening gap just below the market. So it'll be interesting to see whether or not they do try to get into that gap. Big gaps like that, huge gaps like that, are usually more, very often they tend to be a continuation gap or an acceleration gap, however you want to refer to it as. But we're going to try not to rush into anything here right out of the gate. Give them a moment or two to settle in. I think where we're at here at 44.20, that number seems awfully familiar. That's not Friday's, near Friday's highs, but I seem to remember that number cropping up a lot Thursday. Oh yeah, there you go. See, 44.20 was a pretty significant number on Thursday. That's where the market rallied to before it got knocked down on Friday. Well, keep an eye here on the Raptor. We might get a soft edge sell. And here on the Hawk, we're already introducing yellow bars. In fact, if you wanted, you do have a red bar buy signal here that you can short. Oh, and here comes yet another red bar buy signal, and it looks like it's going to fall right on the trend line. Oh, no, now that one's gone into yellow bars, so we're going to ignore that one. But if you wanted to get in this trade early, you could set up to short below here. You need to cover obviously above there. I don't think I'd go in with two contracts. I would definitely dial it down to a single. Okay, we did get a soft edge sell signal here on the Raptor, but technically it's hasn't been tested, has not retested the extreme. Let's see if we can't make that a little bit bigger. There we go. So looking for, this would now be the retest. If it comes back with a sell signal, that might be worth trying to short, as the market's likely to go to the hard edge. Oh, and there they come with a buy signal. If you're going to take this buy, I would recommend using the second push entry. In other words, we're going to let the signal engage, which it has, and now you place your entry order just above the high of this bar, just above the high of the signal bar. I'm waiting for that soft edge sell. This would be a very nice failure, and still more yellow bars in the Hawk. All right, good luck, Joe. Joe says he's going in there with a onesie. The nice thing about these types of formations is it's pretty easy to cover the trade, right? Because we know we're going to cover it above this swing high. Things are relatively close. All right, here they come. So a decent retest of the high, possible failure signal here now, possible retrace to the hard edge. So far you can see we're just trading within a very tight range. A little bit unusual for a Monday. Absolutely. Joe says, can you take a look at the 30-year bond when you have a chance? I will load that up and bring it over for you here in a second. We're still stuck. Yeah, here they come with yet another buy signal. So a possible 4-arrow consolidation. Here's another buy signal in the Raptor. This would now be your hard edge bounce. I would recommend taking it above the high rather than on the hash mark. And I would really like to see it fail here. It would be a much easier short than a buy. And there they go. They're going to bring us in. So let's get a stop and play here. There, that's a little better. All right, so we'll see if we can't ride out this initial little reaction to the breakout. And we've got a trend change / late filter entry signal here on the Falcon. A very ugly looking chart at the moment, but there was a signal right there for your Falcon. All right, while that Raptor trade is brewing, let's take a look here at the bonds. So we've got a nice macro pullback signal here on the bonds. Hold on, is my data streaming? Oh yeah, it is. It's a nice thing about the Geiger counter is if you ever suspect your data's not flowing, there we go. All right. All right, so the 30-year bonds will show us the opposite of what we've been seeing in the stock index. And in this case, we've got a market that's in a very strong downtrend. Now, if you're trading the bonds on the hawk, you may even want to go down to a 2-tick brick. I'm using the default settings here. Sometimes the 4-tick brick is even a little bit large for the hawk. You can see here was all of Friday's trading. Thursday was a little bit better. Usually want to see the day at least span the width of the chart. Friday being Friday, okay, that's acceptable. And here we're working a macro pullback signal. We're looking at the market to possibly retest the lows. There we go. Yellen has another announcement tomorrow, Tony says. So that could, the market must be thinking it's going to be good news, because that is a huge, huge gap that we just woke up to. Nothing here on the Falcon at the moment. We were working a trend change signal to the upside, but it didn't trigger. And now we're working the beginnings of a trend change signal lower. And I'll pull up gold for you in a second there, Russell. Just take a quick look here at the Eagle. And we're getting a kind of a soft edge sell signal here on the Eagle. You could wait for the ATR to turn over. The problem with the bonds is your stop should go on the other side of this gap. And that's just going to be really hard to cover in a market that trades for $31 a tick. Okay, just a sec, we'll get gold up here. Okay, so our Raptor trade working out not too badly. Russell, I'm glad you're in the room this morning. I did reply to your email. I'm sorry, I normally shut down my computer on the weekend. So if anybody emails me on the weekend, if you ever wonder, is Eric ignoring me? No, I try to stay as far away from my computer on the weekend as possible. So I did respond to your email. You may want to take a look at it. Okay. Let's see here with the gold. Russell is asking, do we have a rule of 3 on gold? Now, the rule of 3 signal occurs on your Eagle tool. Now, I've got the alternate settings on my gold, but I'm going to change this here to the default setting because I have a feeling that's what Russell is looking at. Okay, I would say no, not yet. We've generated one signal against the hard edge. Yes, we are getting a retest of the low. What we want to do is we want to see another signal print. It would make things stronger, but it's not technically a rule of 3. Let me see if I can find you a good rule of 3. Well, here's one. Didn't have to go too far. So we've had a little bit of a downtrend. The band has changed over. And then we start to produce 1, 2, 3 signals against the hard edge. Now the rule of 3 is just kind of the most common number. Most often the market will produce 3 signals against the trend before reversing and heading the other way. The rule of 3 signal should be fairly compact. Like, we don't want to see a signal back here, and then a signal over here, and another signal over there. It's showing a more or less a rapid change in direction. So we've got 1, 2, 3, and we have seen a retest of the low. In fact, 2 possible retests of the low. Now, even though this one worked out, this would be a little bit of a nail biter. Why? Because this is also looking like it may be a bear flag, and in which case the market would continue lower. But technically, that's a rule of 3. Right now, we don't have that kind of situation here. We've got the 1 signal, and I'll check the alternate settings if by chance you were watching those. And I have a feeling I should be getting back to my other trade here in a second. Okay, so we've got a downtrend, a bearish band. So here's signal 1. This is something resembling a retest of the low. We need to see another signal print. I would like to see, well, it's hard to say. I was going to say I'd like to see a more serious retest of the lows. Yeah, okay, Russell says he's watching the 12 tick. So no, definitely not on the 12 tick, not yet. Oh, I should have been watching my trade here a little bit closer. As we're seeing the sellers step up a little bit. Let's see if I can find you another rule of 3 while we're letting that one unfold. This is very similar to what we've been seeing in the gold chart, in that here's the 1 signal, here comes the retest, here comes the 2nd signal. You do have all the elements of a rule of 3 now. If you wanted to buy this, you could buy it above that high, but ideally we would wait for another signal, the market to head a little lower, another signal to come back, and then that would be our rule of 3. Unfortunately, in this case, the band started to turn over already, and we actually produced a couple of with trend signals, which would have been maybe a little bit more desirable. Let's go back here and see if we got a rule of 3 on this reversal. Yeah, this one's not bad. So we've got an uptrend. Remember, you always need to have a trend before you can have a counter trend. So we've got an uptrend. We're producing 1 signal against the band, 2 signals against the band, and now I'm starting to get really interested. And I'm thinking, is this going to be our test of the extreme? Is this all we're going to get out of the market? And now here comes signal number 3. And sure enough, now we have a rule of 3. 1, 2, 3. Entry on this one is dealer's choice. I would probably take it on the signal bar right here rather than risk entering below the low. And the reasons is logistics. You know, I've got to give up all these ticks. I got to give up about 10 ticks before I even get my entry. So I may as well bite the bullet early, get in there, try to cover the trade above the high, and in this case the market fell off. No problem. So the rule of three when you're watching for that, try not to rush it. Try not to rush into the trade. You're watching a market that's trying to change direction, and you want to make sure it has changed direction before you get a little bit too excited about shorting it. All right, they're taking their time here this morning. So what I'm looking for now is I'm looking for a final commitment on the part of the buyers. Let the buyers show me that they're going to try to rally this market one more time, at which time I'll try to get a little bit more aggressive with my stop. Come on, get up there, you stinkers. All right, don't do this at home. I'm just going to roll my stop below the morning low. Well, things getting still a pretty scrambled mess, as you can see. Okay, we're going to get a red bar buy signal here, which you could set up to short the failure of. It hasn't produced yet, but what we would be looking at is we would be looking to sell below the low, cover above the high. I'm not going to do it because I'm already in the Raptor trade long, and, well, the signal just disappeared. Oh, there it is. This is, again, because it's a counter trend signal. If you were to do it, you would do it on a single contract. I would not recommend going in too heavy, not to start. And it looks as though every time it tries to trade lower, that buy signal disappears, so it's technically not going to be a red bar buy anyhow. All right, just looking for one more rally here. Okay. Come on. Come on, you can do it. Just give me a couple of bars. Come on. Oh, you're going to be like that, are you? Here, we'll give you a little incentive to go higher. Get going. Get up there. Give you a little push with the mouse. Come on, get going. There you go. See? It works. Oh, come on, get up there. Wow, everybody is just moving sideways. Joe says, Eric, when the market slows down, can you talk about the two clouds? I don't think it's going to get much slower than this, Joe. What is it you would like to know? How to set them up, or how to use them, or something else? How to use them. Okay. The two clouds, as I mentioned before, were the invention of Ricardo from the Raptor trading room. He likes to tweak the Raptor settings somewhat, and he said, hey, let's put two clouds on here, because what he was looking at is he really likes trading the hard edge bounce. The market comes into the hard edge, bounces out, he's buying. Comes in, hits the hard edge, bounces out, he's buying. Well, there were instances where, as you can see here, the market never got deep enough to hit the deep hard edge, so he imposed a second cloud. So you've got two levels that you can watch for market bounces. And I should mention, when Ricardo was taking these bounces, he would usually be using a scalping target. So it would be a bounce, it's a relatively short-term trade, he just looked to scalp in and out. My target is a little bit more ambitious than what his is. The nice thing about the cloud is that you get these, I'm going to have to wait for this trade to close out. You get the cloud crossovers. And when the clouds cross over, you'll see the market retreat into the cloud and come out of there with a buy signal, and that tends to be a pretty solid signal. All right, we're going to let this trade go now, and I'm going to jam my stop in a little bit tighter. Normally I would still leave it a little bit back here. Oh, all right, so far so good. So we'll see what they can do with this now. Have they flipped over to the parabolics yet? No, I'll leave it on the ATR. All right, excuse me for just a moment. I'll be back in a couple minutes, and I'll tell you a little bit more about the Raptor clouds, and hopefully this trade will at least get up to our break-even trigger. Back in a moment. Okay, I'm back, and it's nice to see the nice rally here. Hit our break-even trigger and then some. And in fact, I might go with the parabolics now. Just get that trade in a little bit tighter. And I'm not going to be able to use this to show you the cloud crossover. Let's go to crude oil, or sorry, the YM. Here on the Raptor. So normally what happens, Joe, is, I think it was Joe who was asking. Yes, it was Joe. When the clouds cross over like this, you should be alerted to a possible signal. They tend to be pretty strong signals as well. So the clouds start to cross over. Normally they're not as muddled as this. Normally there's a decent crossover, but whenever they start to intertwine like this, anticipate the market to retrace into the cloud, and then if the trend is really changing over, it's going to come out of the cloud and it's going to produce a signal. Now, if you didn't deem this part here to be the cloud crossover signal, you would have certainly considered this next one to be the cloud crossover, where the market comes into the cloud, bounces out, produces a signal. And again, you can see these types of things occur whenever the trend changes. This one, not the best one. In hindsight, it's easier to see. You can say, yeah, there was a cloud crossover signal right there. The clouds crossed, the market retreated, and it came out with a signal. In actual fact, I would have treated this as the cloud crossover, where the clouds crossed over, the market retreats into the cloud, comes out, produces a signal. Let's see if we can find another one before we move on to something else. No, that wasn't much of a... We're still more or less bullish this whole way. Oh, here we go. This one's almost textbook. So big downtrending cloud. The clouds cross over, the market retreats into the cloud, comes out, produces a signal. This one is very drawn out, as you can see. And then that also had very nice progression. So the two main uses of the clouds are the cloud crossover type signal, and then you're watching the hard edges for bounces. So there's a hard edge, came out with a bounce. Yeah, that one didn't work out. It actually drifted to the second hard edge before it rallied. But like I said, if you're going to be following the hard edge bounces, I know Ricardo does run a scalping profit. He doesn't look for the market to move too far. Okay, so I hope that clears up a couple of things on the Raptor. And it looks like we're going to get tagged here in a second. Maybe. Parabolic's doing a pretty decent job holding us in so far. Oh, Joe must be in the bond trade. He's saying, come on down to Papa. Yeah, I used to follow the bonds. Well, I would trade them once in a while, but I would usually just watch them to get a handle on what was going on in the stock index. In other words, if the bonds were rallying, you would expect the stock index to decline. And if the bonds were falling, you would expect the stock index to rally. If you saw a rally on the stock market and the bonds did not decline, then that would usually tell you that that move would be pretty short-lived. Okay, looks like this 44.30 area, pretty good line in the sand. If the buyers lose their grip at this point, then we're probably going to see the market move lower. Why do I say that? Well, the buyers have been churning the market all night, finally made a commitment to the upside. If they can follow through, it's obvious then, or kind of obvious, that the sellers are going to take the market away and push it lower. Let's see what else we have going on here. Oh, we have a first micro-macro cross signal here on the hawk. We did get a red bar buy signal here before that nice rally higher. Problem with this first micro-macro cross is covering the trade. Right? You pretty much got to cover it all the way down there if you can. Or at the very least here to the crest in the macro or micro lines. Because there is a chance that could drift into a macro pullback. But for so far today anyway, it does look as though it is a buyer's market. That big opening gap, the recent rally, let's see if the buyers can follow through. Yeah, we're staggering a little bit here. I think we're going to see a move back to the, well, here as far as the Raptor goes, to either hard edge, either here 44.24 or to the 12-tick hard edge at 44.15. And that also happens to be a resistance line, 44.24. Come on, 44.30, don't cave. Don't cave. Get up there. Oh, all right. Well, it was a good little trade all the same. Expect the sellers to show us what they've got now. All right, let's see if they give us a macro pullback signal here. Now the problem with this macro pullback are these highs here at 44.36. because we've had the huge rally through the overnight, a steady progression higher, even though it hasn't been very smooth. And when I say huge rally, I'm referring to this opening gap, which is essentially a huge rally. And now we've had this little rally here. This macro pullback signal needs to deal with the obviously strong resistance at 44.36. All right, well, are we going to get a macro here or not? All right, well, we'll put that on the shelf for now. What would be a very easy signal to take would be to see the market come back up here to 44.36, get rejected. We would likely have a red bar buy signal we could short, perhaps a double top signal here in the Falcon, or a double dot signal, I mean, and perhaps a soft edge sell signal on the Raptor as well. And now they're just kind of sitting there doing nothing. There's nothing wrong with this macro pullback signal. If you're wondering, why isn't Derek taking that macro pullback signal? There's nothing wrong with it other than the fact I would need to cover it way down here. So I'll show it to you, and hopefully it will get up to our profit objective, but there's a real possibility we could see this market drift, say, to this 44.25 area, which is about where they made the breakout before. quiet, no question about that. And it's probably because of Yellen's pending announcement. Nobody wants to get too crazy. Yeah, Joe says this market's putting me to sleep. That's the truth. Come on. We know what they're going to do. They just don't want to get around to doing it. All right, there they go. Come on. Hooray. There's some buyers. All right, so here they come. Looking like they're going to try to get to the hard edge now. Maybe. Well, there's not much to talk about. I'm still here. Waiting for this macro pullback signal to do something. Retest the highs, fail, something, anything. Gold fell off a little bit, but it's pretty quiet now. Crude oil dead sideways all morning. Sure, Joe. Joe's asking about the support and resistance suite. And I should mention, if you guys haven't gotten Adam's promotion yet, he is running a Father's Day promotion where, hold on a second, let me get you the particulars for that. So you can get anything at Indicator Warehouse, 25% off. Father 25, all caps, is your incentive, your promotion. Okay, so the support and resistance suite are, I happen to have mine on the Falcon. You can put them on all your charts if you want. They work on any chart except for a point and figure chart. So they'll work on, oh, sorry, my back. They're working on a time-based chart, tick-based chart. You can see here the mean Renko bars. You get an assortment of 21 support and resistance lines, which are forecast for today's trading. The gold line is the median line that tells you you're kind of in the middle of the mix. It's kind of the neutral area. Then the line above is the primary resistance, and the line below is the primary support. Now, different people have different ways of trading support and resistance lines. There is some information with the tools themselves, or with the indicator itself, but we kind of left it open to people's interpretation because, well, here, let me build a time chart, and I'll show you how it can work on a time chart as well. New NQ. Come on, where are you? There you go. So we'll make like a, I don't know, a 15-minute chart, let's say. Okay, looks like they got up to our profit target. Okay, so here's a 15-minute chart. I'm going to put the support and resistance suite on here. I need to load a few more days. I think you need at least 10 days of data. There. All right, so here's a very basic way of how some people who are using time-based charts will trade support and resistance lines. And again, we left it open to everybody's interpretation because a lot of people have their own way of doing it. But you see here how the market rejected the median line, came down here, settled on the primary support. Traders would be watching this for a break and a close below there. So when on the 15-minute chart, the market broke and closed, to them that would be a clear sell signal. And you can see it had some very good follow through and fell promptly to another support line. Now, normally when we see a break of a primary resistance or primary support, I usually expect a 2-zone move. This one moved 3 zones. So my profit target, I would have been getting serious about taking profit around here. The market actually ended up moving another full zone all the way down there. But you'll see, time-based charts, they work just fine. Here, I'll throw a tick chart on here. And I know you're probably going to be using it for the support or for what we're doing here in the room with the DTS, so I'm not going to waste too much time with this. Oh, shoot, I keep forgetting. Got to add more days. Not enough data. There we go. Let's fix that. Apply. Shoot, wrong number. There we go. The 250 tick is going to be too small. Let's make it okay, that's better. So same kind of thing, you know, if you're looking to trade this type of thing, you'd be looking for a breakout and a close above or below, and then you would plan your trade accordingly. Some people like to wait for the retest as well, where if you get a breakout, you'll wait for a confirmation. Other people will just get in on the breakout as soon as the market closed, and then cover the trade, usually above or below the next zone. So a breakout here would be a buy signal, and then you would cover below the swing or below the next zone. Your profit objective would be this zone up here. All right, so that's just a very simple way of how you can use it apart from the support and resist, or apart from the DTS system. With the DTS system, a lot of times I will use it to confirm a signal. So right now we're working on a late filter entry signal. So if you were looking to take that signal, this is actually how, I should point this out, this is how Omar used to do it with the Forex. He would take the signal, he would cover below the next resistance line, and he would use the next resistance line as his profit objective. Now he liked to get signals that were very close to breaking a resistance area. So here's a resistance area. Here we come with a signal on the Falcon. This is something that Omar would really like to do. He would like to take that signal on the breakout. He would cover below here, and then he'd use that as his profit objective. So that's how he would set up his trades. And now that the market had gotten above there, he would probably take his stop from down here and take it to the break even or just below the support zone. So you can use it to confirm your signals that way as well. Personally, I like to use them as profit targets. You know, if I see a signal developing, or if the market is trending, I like to say, okay, well, it's likely to get to 44.45, and then we're probably going to see some sort of reaction. If it comes back down here to 44.24.25, I would be looking for some sort of support from the buyers and a possible buy signal to develop. So I'll try to focus on that a little bit more for you as we go along here. For those of you who might be interested in picking up the Ultimate Support and Resistance Suite, or any of these other tools like the Geiger counter, for instance, if you haven't added the Geiger counter to your assortment. Very helpful tool. Great for judging which way, who is controlling the market. Again, if you're in a position, the reason the Geiger counter was developed is we had DTS owners saying, okay, I'm long a trade. How can I know if the momentum is starting to shift, where I might want to get out of the trade or perhaps tighten my stops? Well, that's where the Geiger counter came in. So you got the visual of the time in sales, and you could see, especially from this dial, which way the market was leaning, whether there was a lot more active buying or a lot more active selling. And likewise, when you're looking to initiate a signal. So for instance, if we come here now with a soft edge sell signal, I would very much like to see this dial pulling over here to the sell side and holding and holding and holding. That would give me a lot more confidence in taking that short signal. So we'll keep an eye on that as well. I'll see if I can't expand on that for you some more. I've placed one tool per chart, so I happen to have the support and resistance suite on the Falcon. I have the Geiger counter on the Raptor, and I have the trade forecaster here on the Eagle. The trade forecaster, useful for helping you identify what the current market condition is and maybe more importantly what the next one is likely to be. What we do with the trade forecaster is if the market, well currently we're in swing mode for about 21 minutes, after which time we're going to be moving into scalp mode. All right, what does that mean? Well, let's start with the extreme. Let's start with scalp mode. In scalp mode, we know the follow-through is likely going to be short-lived on a move, and there's going to be a lot more violence in the swings, a lot more range in the swings. Therefore, if I'm producing a signal, we don't have a signal here, but we're pretending now. If I'm producing a signal and I know I'm in scalp mode, I need to keep a deeper stop if the market's going to make bigger swings. Likewise, I may not choose to go for my full profit target because we're in scalp mode. The market may make smaller progressions, so maybe I'll reduce my profit objective. Or, perhaps I'll not take the signal on the Eagle if I have a comparable signal on the Hawk, which is my scalping tool. Maybe I'll just take it on the Hawk. That way I don't need to make any adjustments. When the market is in trend, that's the other extreme, it does not always mean you're going to see a move like this. Very often it does, but what trend mode really means is that your pullbacks are going to be minimal and your follow-through should be greater. So what does that mean for you? Well, that means that, let's say the market is in trend mode and I'm producing this trend change signal. I may choose to go with a tighter stop so that I can trade multiple contracts. I may choose to expand my profit target a little bit. Maybe instead of 40 ticks, I'll go for 50 ticks, knowing that the market may have greater follow-through to it. And then last but not least, we have the Day Ranger here. This is another system add-on. And the Day Ranger gives you the current daily range compared to the yesterday's range, the 5, 10, and 30-day average. And what this shows you is whether a market is expanding or contracting. So right now it looks as though the market is contracting. Our 30-day, oh no, sorry, maybe it's expanding a little bit. It's kind of waffling. Our 30-day range, 183, 10-day range, 176, 5-day range, 217. So the range last week, a lot more volatile than it's been over the last 2 weeks or even the last month. Today our range is 121 ticks. So we've got maybe another 100 ticks in store somewhere here. So the Day Ranger gives you an idea as to how the market is trading relative to the averages. Is there, can you expect much more of a move today? Well, yeah, there's probably another 100 ticks out there at least on the NASDAQ, which are likely going to come about this afternoon. And you can also use this to set your stops or profit targets if you like. I know people who do that. So they'll look at this and they'll say, okay, it looks like we're averaging about 200 ticks on a day. And let's say I want to take 25% of that range as a profit objective. So you would have a 40 tick target. Or, pardon me, a 50 tick target. So you come back here, you get this red bar buy signal. You say you want to go for it, and you're going to get your 50 ticks. Hold on a second. There we go. And let's say, and you can also use it on the stop loss side. Let's say you're going to risk 10% of the daily range as a stop loss. So that's going to give you a 20 tick stop loss. So 44, there's about 20 ticks. 5 points lower would be 20 ticks. Yeah, well, close enough. All right, so here's your stop loss, 10% of the daily range, or 15% or 20%, whatever you like. And there's your profit objective. And boom, there you go. You just took a quarter of the day's range as your profit objective. So you can become very sophisticated with some of these tools if you choose to be. Joe's asking, when is your next profit run? We haven't scheduled one, Joe, for a while. I've done, what have I done, 3 or 4? And thank goodness they were all profitable. They're pretty intense, the profit runs. I don't usually do a whole lot of explaining or teaching during the profit runs. I'm focused entirely on trading. Oh, see, and while I was talking here, we just saw gold make a rather substantial move higher. Here's gold on the eagle. See, now this is a rule of 3. 1, 2, 3 signals had the test of the extreme, a retest of the low. The signals all developed relatively quickly. They don't need to print right beside each other. But you don't want to say, oh, well, there's a buy signal back here, and here's a buy signal over here, oh, and here's a buy signal over here. That's stretched out too much. Remember, you're looking for a change in momentum. So 1, 2, 3 signals, tested the low or retested the low. The failure, and great rally up there on gold. Tony says on his Day Ranger he only has 4 lines of text. So I'm guessing your last line says average 10-day range, in which case you don't have enough data. If you're going to get the 30-day average, you need to have at least 30 days of data. 31 to be precise. But anything over 31 days will also give you the 30-day average. Well, this is very much a sideways market. I guess we should consider ourselves lucky that we got some of that early momentum and managed to take profit on that little macro pullback signal. Yeah, I know. Joe says gold ran away without me. Me too. Here's first micro macro cross on gold. So getting some decent follow through there. All right, well, getting a couple late filter entry signals here on the Falcon. I don't like to see them print too often. The late filter entry signal is similar to the macro pullback or the red bar buy and green bar sell, in that you don't want to see them printing over and over and over again. Because what's happening is every time the momentum shifts enough, you're seeing selling pressure. And then the buyers come back, but then there's selling pressure and the buyers come back. Now that's not to say this market isn't going to rally from here, and it's not to say this is not a late filter entry signal. It is. However, you need to be aware that the best late filter entry signals develop when the, I'm not going to be able to find you one now. They're going to close the order so I can show you this a little better. The best late filter entry signals develop when there's just a slight break in momentum, and then the buyers or sellers stomp all over the whoever's trying to break the momentum, like right here. Excuse me, I'm falling apart here. Like right here, right? So we had the, well, actually, I guess it's been in trend for a little while, but we had these buyers trying to change the momentum on the market. Sellers came back really quick, knocked them down. Notice the buyers didn't get very high here. Sellers knocked them down and boom, down she goes. Compare that to what we're seeing here. You know, the sellers pushing the market down, buyers trying to come back. Sellers pushing the market down, buyers trying to come back. Yes, the trend line has not changed color, so technically this is a late filter entry signal. However, there's obvious resistance here at the highs. This whole 44.36 area continuing to be a real pain in the neck for the buyers. So if you're going to take this late filter entry signal, you may want to wait for a second push on the entry, and all that means is we're going to allow the signal to engage. There we go, the signal has engaged. And now let's see whether it gets knocked down. Come on, knock it down a little deeper. Let's get rid of some of that early buying. And once that signal gets knocked down, it's not knocked down yet, but then we would enter above the high of that bar. And what I'm looking for is, I'm looking for the sellers to show that they're really trying to take control of this bar. Maybe drive it a little bit deeper, at least past the halfway point. And then what I would like to see is, I would like to see the buyers come back and push this market higher. There they go. They're gonna take their time on that one too. All right, you guys. I think we're gonna button up the room here this morning. And Russell, I got your message. I'll be touching base with you shortly. And I guess we'll see you tomorrow. Hopefully after Yellen's announcement, things will shake up here a little bit. I would have been inclined to think that the market would try to reach back a little bit today, but so far it's a bull market, no question about it. You could even channel or bracket this range that you see right here. You could bracket that buy above, sell below. Okay, see now how this bar is? That's a very reactive bar. That's the kind of bar that if the buyers are going to take control of the market, this is the one I want to buy above. And you can see where it's at. It's right back at that 44.36 area. That's been holding them up. Okay. Yeah, we'll just button up the room for now. I don't think we're going to miss too much. And I'll talk to you guys tomorrow. Bye for now.